So, I'm a value guy. Talk to me about where these guys are trading.
Sure. So, and I know you're going to ask me at the end of the show, like which one I think is better.
Of course
I'm going to preempt that question and cover it a little bit. So, Sturm Ruger,
Which stock would Dirty Harry buy?
Smith & Wesson, obviously. But Sturm Ruger pays 2.5% dividend, so it's a little different because whereas Smith & Wesson doesn't pay one at all. Valuation-wise, they're very similar. So I calculated this based off of their prices this morning with the surge they've seen recently because that's likely to continue, and based off of expected 2015 calendar year earnings. So 22 times for Sturm Ruger, 21 times for Smith & Wesson. Now, keep in mind that Ruger has a really strong balance sheet, no debt. They have very strong free cash flow.
Are they family controlled? I'm reaching into the cobwebs here. They have a
I actually do not recall.
Look. Anyway.
But they have really strong free cash flow to cover the dividend payouts. And honestly, both companies have a very strong name and reputation in this industry. So like I mentioned, Smith & Wesson, 21 times, no dividend, but similar strong cash flow. So if you were to ask me to pick, I think it's really tough.
Sounds to me like you could buy both and be fine.
I think you should look not at the company separately necessarily. If you're first considering investing in this industry, you need to look at the volatility and the fact that these companies are not necessarily going to be driven by business fundamentals and things along those lines. A lot of it's going to rise in lockstep with each other, and a lot of it's going to be driven by headlines, what happens in the political landscape. So it's just tons and tons of volatility. So if you're okay with that,
I mean, this has a speculative feel to it.
Exactly.
I mean, it really does. So.
And I think for a stock like this or for an industry like this, taking a truly long-term view is your best bet because and I think anybody who's trying to bet off the election.
So do you want to own these guys regardless of what happens in the next year?
And then between the two companies, you can look at that income component that Ruger offers.
Yeah, I was surprised. That's very reasonable.
But otherwise, considering either of these, definitely take that long-term view, and also just consider the fact that it might get hit, whether you think the business is doing well or not, just with the way events can take place with the presidential election and everything else. So.